Welcome, dear traders. The long Easter weekend is coming to an end, so the thin market will be over tomorrow. Today, Wall Street is given a long overdue response to the nonfarm payrolls released on Friday and is trying to figure out the Fed's policy moves. You're watching a recap of the New York pre-market on April 10 with me, Nedachina. Wall Street gave a muted response to the official employment data. The thing is that the non-farm payrolls for March matched the consensus, so the data had been already priced in by the market. However, it does not mean that the stock market will avoid a roller coaster in anticipation of the Fed's policy meeting. On the contrary, investors are alert to the other macroeconomic data to be released this week. The report of crucial importance is the US inflation data, especially the core CPI. US industrial production data will be on tap later this week. Besides, investors will take notice of the corporate reports on quarterly profits because such information is crucial in light of the recent bank crisis and because a recession threat is still a realistic scenario. On a Wednesday, apart from the Consumer Price Index, the Federal Reserve will provide the minutes of the policy meeting in March. On Tuesday, the International Monetary Fund will kick off a summit. So, investors will be able to grasp plenty of hints from policymakers' remarks about the current economic conditions and to judge on how hawkish the US Fed could act. The US dollar opened on a Monday with a modest decline but reversed cardinally in the midday. The greenback finds support from several factors. First, most market participants believe in a rate hike in May. Second, escalating tensions between the US and China because of Taiwan assure investors to shift the focus to the safe haven US dollar. Amid such catalysts, the US dollar index went sharply up and rallied to 102.50. Nevertheless, some investors prefer other safe haven assets, in particular the yen or gold. Hence, the dollar bulls refrain from opening big bets on the back of falling yields of US treasuries. On the top of that, traders are hesitating due to uncertainty about the forecast for the Fed's interest rates. Following a rapid rally in a European trade, the US dollar moderated its growth but continued consolidation in the corridor between 101.90 and 102.60. A climb towards 102.70 and higher will underpin the bullish momentum. If the US dollar index breaks support of 101.10, it will set the stage for a further bearish move. The greenback is also propped up by the thin stock market. On the one hand, the US non-farm payrolls aroused hope for a soft landing in the US economy. On the other hand, investors will be cautious, willing to play safe ahead of the inflation data. The most powerful catalyst will work out on Friday. It's the day when American banks will unveil their corporate reports. In the light of a series of bank failures, quarterly reports of top banks such as JP Morgan Chase, Citigroup and Wells Fargo could exert a strong impact on the S&P. Last week, the Dow Jones was the only stock index to close with gains. The S&P 500 and the Nasdaq lost 0.1% and 1.1% respectively. The S&P, which is viewed as the most accurate barometer of the stock market, is opening with a muted dynamic today, ahead of a series of crucial economic data. The index slipped to 4,076 points in the early New York trade. Some analysts project that aggregate profits of the companies in the S&P 500 could drop by 5.2% from a quarter ago. The Canadian dollar will also depend on the Bank of Canada's policy update in addition to the events mentioned above. The policy meeting is scheduled for Wednesday, April 12. The central bank will hardly revise the settings of its monetary policy. However, the risks entailed by inflation, the labor market, and the situation in the United States could prompt the Bank of Canada to proceed with the rate hikes. Thus, the forecast for the policy decision is obscure. The USD CAD pays a trading within Canada between 1.3485 and 1.3554, with an upward bias today. The commodity-reliant loonie did not find any support from oil prices. In the early New York trade, the loonie weakened to 1.3543. Bitcoin has been consolidating in a narrow range between 28,182 and 28,422, awaiting the crucial news from the United States. The flagship cryptocurrency is successfully competing with the main fiat currency. The token is trading at 28,264 at the time of recording this video. One of the decisions behind Bitcoin's growth could be its luster as a safe haven asset. 2 days are left before either the second largest crypto in terms of market value will undergo the next major upgrade, Shanghai. A new area is on the horizon for Ethereum, but everything here scares off investors. Perhaps some investors are converting Ether to Bitcoin. Despite optimism gained in the early 2023, Bitcoin is at a crossroads for the time being. The token has got stuck between the round levels of $28,000 and $29,000 for 3 weeks straight. The borders are getting tighter. All in all, Wall Street is opening a new week with a confused sentiment. The week ahead is jam-packed with news and macroeconomic data. Don't miss our videos on our InstaForex TV channel and trade with the profits. See you online tomorrow.